Namaskar. Modi government is completing 12 years in the system. During these 12 years, the economy has seen number of disruptions, whether we talk about COVID, whether we talk about Russia-Ukraine war, or now ongoing West Asia crisis. How the economy is doing? What kind of prospects are there? What kind of expectations are there from Indian companies, India Inc.? To talk about all those things, we have with us President of Federation of Indian Chambers of Commerce and Industry, Mr. Anant Goenka. Mr. Goenka, thank you very much for joining.
Thank you.
Sir, my first question to you about how do you assess the Indian economy of last 12 years?
I'd say the performance of the Indian economy in the last 12 years has been remarkable. We are one of the fastest growing large economies in the world. We have gone through various disruptions, as you highlighted, from COVID to Russia-Ukraine war, more recently, more wars that we are seeing, global macroeconomic instability. And in that global instability, I would say India has been the face of calm. A lot of that has happened because of high focus on India's macros. If you look, our risk levels have come down substantially while growth has been good. Our fiscal deficit is in control. Corporate balance sheets are in good position. Bank NPAs have come down substantially. So on all fronts, whether sovereign upgrades have gone up, we have been doing very well. I would say the biggest change has come about in the main structural changes that have happened over the last 12 years. And the few structural changes that have had substantial impact, I would say, is GST 1.0 and 2.0. That has made life much easier, much more transparent. Corporate tax rates have come down. Focus on public infrastructure, whether it is physical infrastructure or digital infrastructure, has seen a big shift. India today is nearly unrecognizable of India that was there 15 years ago. Mm-hmm. Focus on public trust as ease of doing business has come into effect. Gati Shakti and national logistics policy that has made cost of doing business better. So we can go one after the other, but there are several structural decisions that have been taken that has made life much easier for corporates. Okay. And all of that has resulted in our growth being strong and stability being good, risk being low.
During these 12 years, we have seen that the capital expenditure in the budget have gone up. But at the same time, there is always a kind of what you can say, a kind of statement that India Inc. is not putting that much money, not putting that much investment. How you see the situation and where are the issues and what kind of solution you can think of?
I feel very confident in the long-term future of the country. And I would say, I'm speaking on behalf of India Inc. And I would not look at it in the form of one quarter or 1 year, but it is a decades-long opportunity that India has. You look at our demographics, we are the youngest population of growth. In fact, very often I think of the power of 30. We are, average population age is below 30. We are going to be young for the next 30 years, and we hope to add $30 trillion to the economy. Which other country has this kind of opportunity anywhere else in the world? So that promise is very high. As I shared, the various actions that have happened to make cost of doing business and ease of doing business has also given further confidence. And investment related promotion areas such as PLI schemes that have come in, Make in India that has come in, focus on specific sectors in the PLI that have come in, all of that gives huge amount of promise. In my view, India is investing. I would say post GST 2.0 more recently, the growth levels that we saw was unprecedented. Mm-hmm. We are in the tire business as RPG, and overall average we were growing at about 8-10% kind of growth. Post GST 2.0, our growth rates have gone up to 15 to 20%, something that we've not seen for a long period of time in a mature industry. Mm-hmm. We are going ahead with further capexes, and I would say similarly, So is the entire tire industry, so is the auto industry, and so are several other industries. More recently, of course, the Gulf crisis that has come in has had some impact on sentiment, but these are external factors. Internally, we are doing well. The war will come to an end. There may be some impact for a few months after that, but I think our promise on India continues to remain very strong.
And that is why we have seen the number of gross fixed capital formation at more than 8%. It has seen the growth of more than 8%.
That's right.
One of the key issue for India Inc. is that the employability and the skilling of youth. You rightly mentioned about the demographic dividend. So, do you think that the skilling program, which is initiated by the government of India, has given you some more confidence in the Indian youth for employment?
Right. I think the conceptualization of the skilling program is very high quality. NSDC, for example, is one where you have corporate as well as government getting together to skill the youth. Corporates helps in setting the curriculum and then being the employers themselves.
Mhm.
So there's nothing better in terms of buy-in, saying that, okay, we are training on what we need, doing the training and then recruiting the
Yeah.
people. So to that extent, the NSDC program has come about very well. I think the scaling up is still something that we need to do and can do more about.
Mhm.
But I think skilling, particularly in areas of construction, manufacturing, digital and industry 4.0, and AI is something that I know the government is particularly focused on. And of course, continuously more and more needs to be done as the area itself evolves.
Okay. You talked about GST 1.0 and then 2.0, how it has helped you and the overall industry. Coming to another scheme which was just announced, which is the fifth version of ECLGS, and that was primarily for the MSME, but also for sector like airlines. How do you see this kind of initiative or the what we can say intervention by the government in ongoing crisis?
So ECLGS is extremely timely. What we can see is that the government has acted uh, very soon after they saw that there are challenges with respect to inflation, impact on MSMEs coming about, and that has provided great relief to certain specific industries that were most hit, as well as MSMEs.
Mhm.
And we have seen this continuously happen, whether it was COVID or post-war. The speed of reaction of the government has been incredible, and the impact on MSMEs can be extremely severe, which has been mitigated to a large extent.
Okay, so you talked about the fiscal initiative by the government and fiscal support by the government. What about the monetary support, especially from the monetary authority like RBI? How it has given some kind of support to you, to India Inc. in doing much better?
So RBI again has been a voice of continuous stability and ease of doing business. So if you look, they have focused on inflation. Inflation rates are very much in control over the last few years. We've never seen maybe 4% level of inflation rates. So to that extent, that has been fairly well managed. Second is volatility. We saw some challenges on forex in the last few months, but the government and RBI intervened at the right time to take decisions on reducing volatility. And for banks and other key stakeholders of RBI, in terms of just making sure that level of permissions, level of compliances, regulation overburden is continuously reduced. That is what I often hear in my meetings with RBI, that how do we make life easy for the stakeholders.
Another initiative by the government is the PLI schemes we have seen in various sectors. How do you assess PLI scheme, especially when we talk about Make in India and also the Atmanirbhar Bharat?
Right. So the PLI scheme focused on about 14 key sectors, whether it is solar modules, EVs, electronics, and other sectors. I think some have really stood out and been a very big success. I'd say electronics is one which has been an outstanding success with Apple, Samsung, Indian mobile manufacturers, Indian electronics manufacturers coming into play and taking advantage of this scheme. We are now amongst the top 2 or 3 mobile manufacturers in the world, and the amount of employment, capital investment it has led to has been very high. Pharmaceutical PLI has also been extremely positive. We had a trade deficit, which has become a trade surplus during this period of time. And to that extent, we've seen great success there as well. I'd say there are certain areas, of course, that we did not see success. But the way I look at it is these are schemes which are you try many things, and out of them, some succeed and some don't, and some can be reintroduced at a time in the future with improvement. So we do expect and we hope for more and more schemes, because it's very difficult to time the market and the maturity of every technology. But over time, I think these PLIs will certainly have helped and will continue to help going forward.
So now there is a talk about the PLI 2.0. I mean, in various sectors. You just mentioned that some of the sectors need to be reintroduced or something like that. Which are the sectors where you think that more PLI kind of initiative is required, and what kind of opportunities available there?
I'd say that EVs in the country have not picked up as much as we would have liked. It's still at about, in passenger car, it's about 5% EVs. So to that extent, I would recommend or say that we can look at further incentives on the EV and EV value chain, such as batteries, because that is becoming more and more important, with India needing to be more energy self-sufficient as a country. We have seen the impact of crude and impact on inflation. So energy-related spaces, I would say, become more important. Also, with the wars having increased around the world, defense, aerospace, and the value chain of some of these areas also, I would say we can look at a PLI 2.0 scheme. The other element I would say we would look forward to is, in addition to the PLI, looking at the entire ecosystem around the PLI. If you look at aerospace, there's a lot of precision manufacturing that has to happen. Can there be specific industrial parks that help aerospace manufacturing? Continuous flow of power becomes very important in precision manufacturing. So ensuring that that part is also backed up in terms of with the PLI coming in. So I would say recommend a complete ecosystem approach for PLI 2.0.
Okay. Now coming to infrastructure, it has always been said that when you are spending 1 rupee as a capital expenditure, there's a multiplier effect of more than 3 rupees or sometimes more than 4 rupees. How do you see the growth of infrastructure progress in India, and how it has helped you to reduce the logistic cost? Because that is very important from your competitiveness point of view.
That's right. I think this government's growth strategy has been very much capex led, and that is very welcome from an industry point of view. It has not only led to investments, but as you said, the multiplier effect of capital investment and infrastructure investment is manifold. It makes cost of doing business lower from logistics cost, which would have been at about 13-14% of GDP, coming down to close to single digits. I'd say the focus on by the government, which has been unique, has been a complete integrated approach on with respect to Gati Shakti. It was not just roads and highways or looking at waterways separately, but the entire connectivity of the ecosystem has helped in terms of making sure that the efficiencies are higher, money is getting spent in the right places, there is impact on sustainability, ease of living impact as a result of better connectivity. We have 150, 160 airports around the country, which has made the airline industry flourish. We have now the largest number of orders of airplanes coming in, and then you look at the additional part of airplane parts, and you have MROs and other impact areas that come in. Railways has been seen a big shift with dedicated freight corridors. So across all aspects of transformation of transportation, we have seen an increased focus here, which has made life much easier for businesses in terms of transportation. It was a weakness for India Inc. or weakness for India as a country, which has become a strength over the last 10 years.
Foreign investment, during FY26, we saw more than $95 billion of gross. But the real issue is the net. I mean, net is not even $7 billion. Where do you see the issue is that since you are always in discussion with the foreign investors, what kind of response you get from them, or what kind of suggestion you get from them to boost the foreign investment and actually the net foreign investment in India?
Right. So if you look at the foreign investment, I'd say our startup story has been a huge success.
Mhm.
The number of startups that we had 10 years ago versus now, I think it would be what, 100 times or 1,000 times in terms of number of startups. Now that has attracted a fair amount of foreign investment over the last 10 years through venture capitalists coming in and large private equity coming in at a later stage. What's happened in the last 6-8 months is a lot of these startups and a lot of these companies have scaled up and have had various IPOs, and that has resulted in an outflow of capital, say in the last year and a half, 2 years time, with markets being fairly buoyant, Indian markets also being very strongly valued, and that has resulted in a net negative outflow.
Mhm.
However, I would say that once foreign investors have made a good return, which is what they have in the last few years, of course, money will come back into the system. Having seen success, the stability, we see money coming in. For further investment to come in, for mature stage investors to come in, I think one is various FTAs are getting signed.
Mhm.
India is emerging as a great alternative to China as people look at diversifying supply chains. And the third is the continued focus on cost of doing business, ease of doing business, as we discussed on uh, logistics investments, power related, renewable power shift that we are seeing, cost of power coming down. I think some of these areas all coming in continues to make India an attractive destination. And I think these structural changes that are continuously happening and more needs to be done towards making sure India becomes an even stronger hub for capital investment.
So, are you hopeful that during the current fiscal or say in a year after two, we will have a much better gross as well as the net FDI? I mean, in terms of 100 billion or more than that, what kind of sense you have?
No, I'm very confident that India will only grow as an investment hub for the world. Whether it happens in 6 months or 1 year, I think my horizon is 3, 5, 10 years, and we will certainly see that. I'd say the next 6 months are challenging internally, but that doesn't mean foreign investment will not come. I think we have internal or the external effects of the war have an impact on balance of payment. They have an impact on inflation, but it's a matter of time. I don't think any country in the world wants this war to continue, and whether it ends in 1 week or in 1 month, it will come to an end.
So, when we talk about foreign investment, one critical parameter for attracting is the rating. And we have seen rating upgrade by at least five agencies. And the good part is that we have never defaulted on foreign exchange or foreign currency payment. If we talk about Viksit Bharat by 2047, how do you see that rating upgrade is going to help in achieving that? I mean, because for Viksit Bharat, you need a growth rate of more than 8% per annum from now onwards. So, how this is going to help there?
So if we have to look at 8% plus growth rate continuously for many years, it means that we need a lot of capital to come in for many industries, whether it is data centers, renewable energy, uh, uh, AI, and several other potential high growth sectors. With ratings improvement happening, there is your cost of capital comes down. And more importantly, it is a signal of stability and low risk, which is a great attractor for foreign investment coming into the country. So it is a great enabler and signal for future growth.
At the same time, there is some issue about the AI thing because people
Risk, which is a great attractor for foreign investment coming into the country. So it is a great enabler and signal for future growth.
At the same time, there is some issue about the AI thing because people think we need AI because you cannot do or you cannot survive without take away the jobs. What is your sense of AI versus job debate about AI? But at the same time, the concern is that it may take out job, it may take away the jobs. What is your sense of AI versus job debate?
That's a tough question. I'd say it's certainly still to be played out. While there will be certainly some productivity increase and therefore job losses in the way we are doing our work today, I think the usage of AI will go up exponentially. If you look at doctors, for example, I mean, doctors never used technology the way they are using now or they will in the future. And that use of technology and AI will help in creation of more jobs. Similarly, teaching, similarly, various other professions will cause the increase of AI and its applications substantially more. So maybe if we are doing so much, yes, there can be job loss here, but the amount of opportunity that itself will grow will be substantially more in terms of use of technology in areas that were never being used. So I feel fairly confident that job loss will not happen, but there will be reskilling and new jobs that will be created.
So, do you agree with NVIDIA head when he said that you need human to create new codes for AI? That means there will be not that kind of job loss which was apprehended earlier.
Yes, I think the fear is a little bit overhyped. Certainly, AI is going to be a change, but you will always have to have humans in the loop to do a check of the output, to avoid hallucinations, to always be a part of the process to validate some of the decisions that are being taken by AI. So I truly believe that humans will always be part of the employment ecosystem and decision making process.
So if I add these just one line, that you need HI, AI, and SI. That's a human intelligence, artificial intelligence, and the synthetic intelligence. The combination of these three will certainly help your economy to grow.
Very well said. Absolutely. Yes, yes.
Okay. Now coming to the current last set of my question for this discussion, and this is about the impact of West Asia crisis. Since we have an ambitious target of Viksit Bharat by 2047, do you see that because of this West Asia crisis, there could be some problem in achieving that, or we may have to reset the entire thing?
So the West Asia crisis, the way I look at it, is a 1 year problem. We are talking about Viksit Bharat, which is still, you have a 20-year runway for Viksit Bharat to be realized. To that extent, crises will come and go. I think we are living in a world where change is only increasing in terms of pace. We saw COVID, we came out of it well. We are seeing wars. Will there be something in 2035 and then again in 2040? For sure, there will be something or the other, whether it is financial, whether it is geopolitical, whether it is something else. And I think we have to take that in our stride in terms of the impact that will come in. So I would again say we have to look at it as long term. These 1 year blips here and there may come. But I think as long as at a macro level we are moving towards high growth, risk management and stability to a certain extent, and wealth growth and inclusive growth in the country, we are good to go. I would not get very lost in terms of have we achieved this level of GDP, or have we really achieved that $18,000 mark on the time. I'd say whether we are even if we are at $16,000 per capita GDP, it's a huge success. So I would just say that the direction and inclusivity has to be there.
But what about the concern of rupee depreciation? Is it affecting the growth cycle in a way?
No, I'd again say rupee depreciation is an output of various changes that have happened in the last 3-4 months. Crude has gone up to $110 per barrel. We are importing more than we are exporting. The need for dollar is higher, and so on and so forth. So it is a fundamental structural shift that we have seen, but it is temporary. We hope that by the end of the war, of course, there'll be maybe a 6-8 month impact, but rupee will continue to depreciate till this war happens, and it is fine. Our exports become more competitive. We will be able to sell more out of the country, and there will be an equilibrium that will be established at that level. To me, what worries is volatility. Mm-hmm. So as long as, whether it is government intervention to control volatility or RBI intervention, that is where they should intervene. But the rest of it should be left to flow in its natural way.
Now, my final question to you, that if you have to give 3 policy suggestions to the government for, say, next 1 year or 2 years, what would be those?
One, I would say, is if we can accelerate the move towards one nation, one election, that will certainly make life much easier. I feel that there is a lot of distraction with elections happening every 3 to 6 months' time. whether it is government bandwidth, whether it is the efforts of people, migration happening to go and vote. All of that is something that will get much more simplified when everyone goes together once in 5 years, and the in between 5 years you're purely focused on growth of the country. So that would be number one.
Mhm.
The second, I would say, is bureaucratic reform.
Okay.
That can we have a stronger incentive system for making outcomes happen? There is some amount of uh, doubt in the system of bureaucrats that the ability to take discretionary, difficult decisions are there. That what if some audit happens on me? Better to let the next person take the decision, or better to leave it to the courts to take that decision. And that's why the heaviness of courts and the bottlenecking of courts is there. So I'd say some amount of reform towards incentivizing them towards taking the right decision or speedy decision, and interministerial or interdepartmental shift is higher. And third, I'd say purely from a business perspective, continuous focus on ease of doing business. So there is a focus on Jan Vishwas, but just continuing